What's up guys, this is Coast from the Expert Crypto Community Discord. I just want to share with you today a quick strategy that I use. It's called a MACD strategy, and I will just show you how I use it and a little bit of information on it. I do find it quite a good strategy. Trading, I can't remember what his name, if you type in YouTube, MACD strategy tested 100 times, he does a really good YouTube video on it. I do find it quite useful for Forex as well as crypto. No strategy is 100%. This has an average win rate of around about 50%, which can be good if you're using a 3-to-1 risk reward ratio. Just want to preface this video by saying a couple of things. Obviously, with crypto and a lot of other markets, we never know what the whales are going to do. So, you will lose some trades with this strategy, but you will also win some as well. And I'll just backtest a few. Excuse me. I'll backtest a few, showing you history, price history, and when this strategy has given you a buy or a sell signal, and we can see, how profitable it would have been. So in front of me here, I've got the MACD up. You just go to indicators and type in MACD, and it will bring up a chart that looks like this. So in the middle, you have your histogram. That means that there is neither buying or selling pressure, and there's nothing going on. When you see these green bars here, that means that there's buyers coming in. When you see red, it means the sellers are coming in. When you see these white bars, it means that there are still buyers in the market, or sellers down here. If it's going down, it's sellers, buyers up. But it's not as strong. The momentum is dying down, and you can see this quite clearly in a lot of these areas. So you see there was a little bit of buying pressure, more. I'm on the 15-minute time frame, by the way. And then that buying pressure reaches selling pressure reaches a peak, and then it starts to go down, indicated by these white bars here. Same with the green, strong buying pressure, stronger, gets to a peak, and then it starts to die down. And that can be a good exit and entry signal. So with the MACD, you've got two lines. You've got a blue MACD line, so this is your MACD, and then you've got a red signal line. I won't go into what they mean or what they do, just over the strategy. If you want to learn more, there's plenty of information out there. So how do we use the MACD strategy? We want to use this as a buy-sell signal. So when the blue line crosses above the red line, that is a buy signal. When it crosses below the blue line, when the red line crosses below the blue line, like you see here, that is a sell signal. On top of that, you can use it, regardless of where it is on the histogram, but I find it a little bit more accurate. If I want to place a buy signal, then I want the blue and the red line to cross when it's below this central histogram. So this would be a buy signal for me. On the contrary, if I want to place a sell order, I want the blue line to cross the red line going downwards when it's above this histogram. So this is a buy because it's below. This is a sell because it's crossing high. But it doesn't work just like that. There are a few other things to take into account. So I use this strategy with another indicator, which is a standard simple 200 exponential moving average, which I will show you here. So this is our 200 EMA, and this basically tells us what is the market doing. Is it in an uptrend or is it in a downtrend? Now, another strategy that you can use is just using a 200 EMA, and if price is above the 200 EMA, like we see here, price, i.e. the market, i.e. the candles, is above the 200 moving average, and it is in an uptrend, that is considered a buy signal. The trend is your friend. You want to trade with the trend. So we can see here the market is in an uptrend, and the price is above the 200 EMA, which means that's a good buy signal. Exactly the opposite for a sell signal. I'll just find one. So whereas before price was above this 200 moving average and it was going up, which is a buy signal, here price is below the 200 moving average, and it is in a downtrend, which indicates a sell. So how do I use this in conjunction with the MACD? The first thing I'm looking for is, am I going to place a buy or am I going to place a sell? So here the 200 EMA is in a downtrend and price is below the 200 EMA, which tells me that I'm in a downtrend. Also, I'm looking at the MACD as to when do I take this trade. So as I said before, if the blue line crosses below the red line and it is above the histogram, that tells me it's a sell signal. So here's a really good signal here. So this will be a sell indicator. We've got our EMA, which is above our price, and it's in a downward trend. And we have a second confirmation of our MACD telling us, here is a crossover, here is where you want to get in the trade. Sorry, my hotkey button for my mic keeps turning off some of these indicators. So there it is there. So here's where the MACD indicator first happened, and it was giving us a sell signal. The EMA and the price was giving us a sell signal, yet this trade would have been a loss. As we can see, price goes back up, but then we have a second one here. Which, if you rode it all the way out to the bottom, would have had you 62% in profit. So this isn't accurate 100% of the time. I do find it more accurate on the higher time frames, i.e. like an hour or 4 hour. It's definitely more accurate. You'll get more wins with that, but you can use it on any time frame. So let's go back from this point and see if we can find any other trades that would give us the right signal to take a buy or a sell. Okay, so it's given us a buy signal here, but the 200 EMA is indicating a sell signal because the price, the market, the candles are below the 200 EMA. So that's a conflicting signal, which I would have ignored. There's a crossover here, but again, same thing. We're not really in an uptrend or a downtrend. It's just kind of consolidating, so I wouldn't have taken that trade. It crosses many times, but what you want is these two to match. So here's a signal. The MACD is crossing below the signal line, going downwards, and we're also in a downtrend on the EMA, and the EMA is above price. So there's a trade there that lined up and would have won. Here's another one. So the MACD crosses below the red signal line. It's above the histogram, and we've also got some information telling us that we are in a downtrend. It is a bit squiffy, this one, because price is neither above or below the 200 EMA. But had you have taken this trade here, again, you would have been in profit from here, pretty much all the way down. But again, you know, I am cherry picking here. You know, you're never going to get in at the you're never going to exit the trade at the best point, but this is really useful for telling you when to get in the trade, because it's not a lagging indicator. It doesn't lag. It gives you real-time signals which can tell you, you know, at the exact moment you need to get into a trade. Okay, here's another signal. We have the MACD crossing below the red signal line. It is above the histogram, the zero line of the histogram, and we are, well, not really actually, we're not really in a bit of a downtrend, but we can see that there was a solid downtrend before this, so that might have been a good signal to get in. Again, that would have given you some profit. Okay, we see a signal here, but you know, we're still in a downtrend, so I wouldn't have taken that. We have a signal here. Price is below. We're in a downtrend, and the MACD is crossing whilst it's above the histogram. And that would have been 14% in profit if you rode it all the way up. Again, just to really stress the point that these have to align. Like here, it's giving two separate signals. Yes, we're getting a buy signal here, but we're not getting a buy signal from the EMA because price is below and we're in a downtrend. So I'm not going to place. I'm going to the trend is your friend. I'm not going to trade, you know, going up when the market is in a downtrend. Okay, so here's another signal that I would have taken either here or here. Both would have been profitable. So again, if you had a 10% stop loss, you wouldn't have been stopped out of this trade. But again, another thing that I do want to stress as well is we never know what the whales are going to do. The market is ultimately going to do whatever the market wants to do, and it can spike you out at any time. But as for just a simple strategy, this is quite a good one. Okay, so this is giving us a signal, but this is actually saying that we're in an uptrend. So that's conflicting signals. So I wouldn't have taken that trade. Here we can see it's giving us a crossover signal here. It's below, and price is actually starting to move up. You would have seen this start to push up. Again, you could have taken this trade. Bit risky because we have been in a downtrend for the past few days, so you have to look at other things as well. Technical analysis will help. You know, looking at the 200 EMA to decide, you know, are we in an uptrend right now? Are we in a downtrend? That would have helped as well. Okay, really strong sell signal here, but we're actually in an uptrend, so I wouldn't have taken that. Here it actually looks like this would have been a losing trade because price is giving us the MACD is telling us to place a buy signal, and before this we were in a bit of an uptrend, so this might have been an indicator like, oh yeah, I'll get in here, and looks like you would have lost this trade here. Similar story with this one, had you had taken this. This strategy is really best to use in a strong trending market. You can see it is a trend, but it's not really as strong as this. This is a strong trend right here. This is a strong trend. So you can see we're in an uptrend here. This would have been a good one to get into because it's very clear. We've got a crossover here. Actually, it comes back. The first crossover is here, and price is price is above the 200 EMA, indicating a buy. MACD is crossing over, and it's below the histogram, so this would have been a buy signal right here. So let's say, for argument's sake, you have a 10% stop loss. Looks like with a 10% stop loss, you would have lost this trade and you would have been spiked out. So it's up to you whether you want to use a 10% or 15% or whatever. That's your choice. But had you stayed in this and you didn't get stopped out, you would have been 30% in profit. So yeah, that's basically the gist of the MACD strategy. I find it more accurate on higher time frames from like upwards of an hour. Really good for hour longs, but you can use it on the 5 minute. You're going to lose a lot more trades. As you can see, we've had a few more losing trades on the 15 minute, but with the hourly, you definitely get a good rate. The problem is that you will be waiting quite a long time for both, the EMA and the price to also match a buy or sell signal down here as well. But it's quite a good profit. Quite a good strategy. Yeah, use it with small amounts, especially if you're new. It's quite easy to wrap your head around, quite easy to understand. I would recommend using it with like technical analysis and stuff like that to give you other indicators as to when you should buy, such as if we're coming to a strong support or resistance and everything else is matching up. But again, you might find that the number of trades that you take per day dramatically drops because you're waiting for everything to line up. And that can be a bit boring, just sitting around waiting for everything to line up. You can actually set alerts, when the MACD crosses over the signal line. It gives you a little beep and tells you, I might want to place a trade. But yeah, I mean, try it out with small amounts of money and see how it works for you. If you have any other questions, hit me up on the Discord, name's Coast. And yeah, hopefully it's helped some of you guys out. Anyway, peace.